Who wants to know the latest update in homes today? I do, and I'm sure many of you do as well. Homes Today on Women's Worldview is proudly presented by RE/MAX Realtor and Advisor, Miss Audrey Forshey. Today, her guest of honor is Mr. Barry Fielderman, who is a senior loan officer. How do you pick out a loan officer? Now that's $1 million question. And that's the topic of discussion between these two professionals today. Let's take a look.
Hello friends, thank you for joining us today on Homes Today. My name is Audrey Forshey and I'm a RE/MAX agent in Montgomery County, Maryland. And again, we have our friend, mortgage loan officer Barry Fielderman, who also does mortgages in the Maryland, Washington, D.C. metro area. Thank you for being with us again.
My pleasure.
Today we're going to talk about how is it that you do your homework and look for a good, reputable mortgage loan officer when you're thinking about buying a property. When people come to me, in the old days it used to be they'd come to me first and then they'd ask me where or who should I go with, where do I find a loan officer, Audrey? And I usually had a few of them that I would recommend to the buyers. The buyers could then talk to the loan officers and figure out who maybe had the best program for them or the best rate, or maybe they just liked them more than the other loan officers. So it was up to them at that point, and they usually came to the real estate agent for that information. But with technology now, more and more people are looking and finding loan officers on the internet. They'll go to a lot of the sites and then they'll just plug in their information and get somebody that will just contact them after they submit their email and phone number and all that sort of stuff. So we're going to talk to Barry about maybe the pros and cons of doing some of those things and what might be the best route for you when looking for a loan officer. So Barry, let's talk about when people look online. I know that when I get buyers, they'll come to me with a pre-approval letter and it'll be from some mortgage company, and I may not know who the mortgage company is, but they do, some of them do good jobs. The thing that I find that is a problem is that the loan officer is out of the area and maybe not local, and they're not accustomed to some of our fees and things like that that we have in the metropolitan area. What are your thoughts on that?
Well, I'm old school, and I've been doing this for 33 years, and I'm not a big fan of going online. Going online is something you should do to get an idea what the rates are.
Okay.
But I wouldn't recommend going to somebody that's online because of just what you said. You don't know who you're going to, you don't know where they're located, you don't know the experience that
and you have
person
to
has.
submit your social security number to them, don't you, sometimes, so they can run your credit?
Well, you have to
get
on that loan application. But more importantly is they have no incentive to move things quickly. Usually, back in the good old days, you had that fear of the real estate agent. So, yes.
No way.
Oh, no. You never been upset that a loan was not going to settle on time. So you have that agent that's pushing you, that you have to settle on time.
Right.
That agent refers you more business. So you want to do a good job for that agent.
Right.
If you shop online, there's no incentive. They don't care a lot of times.
And I also find too that when they do their truth in lending document, and buyers will ask if there are points, which we've talked about before, are there points? What's the difference between discount points and origination fees? A lot of times they'll say, no, there's no points, when in fact there is an origination fee that most buyers are not clear in terms of paying extra money for their loan.
There's hidden fees too. I was doing an equity loan a few years ago, and I thought for fun I would go online and try to get one.
Right.
And I'm a lender. I know what to ask for, and I was told there were no points. And when I got my good faith estimate, there was an origination fee,
right,
which technically is not a point. Also, you have to be careful of lender fees. So it might not have points, but it might charge you lender fees, which equals a point.
Right.
So you got to be careful. There's a lot of hidden stuff when you're online, and I just took a loan today that I quoted 3 3/4, and online was quoting 4.25. And I think a lot of people think because it's online,
it's cheaper.
It's cheaper.
And another thing, I remember that there were the programs where, you know, you could submit your information, it would download to several lenders, and then several lenders would come back to you with quotes so you could shop for the best quote. But then I tell people that I think what happens then is you just had 10 people run your credit report, and that could affect your credit, right?
If they run the credit report.
Okay.
And you really can't quote unless you know someone's credit score, because it's all based on your score.
Right.
So a lot of times you get these quotes, you go and you online and you see someone's at 3 5/8. Well, no, they're not. They're not at 3 5/8. That's if you have an 800 score and you're putting 25% down. You don't know what you're getting, and it's very misleading, and you don't know what you're getting, and more importantly, everyone that's involved in the transaction has no control over this internet company that nobody knows who they are. So it's a lot of problems. And remember something: a great quote means nothing if you don't go to settlement.
That's right. I agree. So then the next way that we look at people getting to a loan officer is through the real estate agent, like we said, and or builders. So what happens for me is if people come to me and they want to talk about buying a property, I'll say, well, have you been pre-qualified? And then I will give them a couple of lender names and say, you know, you can talk to them, as I said before. And the thing that's important there is that I have a relationship with those builder or the loan officers. And so what happens is that loan officer always wants to do a really good job. I have direct access to the loan officer. I'm kept in the loop of what's going on, and typically we close right on time. That's really important, and those are the things that the online folks really have a harder time doing. The other thing too is if you go to a builder. So when you go to a new home community, you know, you'll look at the model and you'll see everything and it'll be really pretty, and then when you talk to the builder, they'll say you have to use their designated loan officer in order to get their credit, is how they do it, right?
Yes.
So they might have one or two different loan officers for you to talk to. My suggestion to my clients when I go to new homes with them is that they talk to the builder's loan officer, and they do see what interest rates they have, and but I do tell them that they should talk to another lender just to compare the rates, because you want to make sure that you're getting a fair rate and you're getting the, you know, the available market rate. What do you have experience with builders?
Yes, I do. And I'm not going to get into which builder, and I'm not going to, but I want to take each one that you talked about separately.
Okay.
Let's talk about real estate agents first.
Okay.
What people don't understand is that a real estate agent has a number of loan officers that are constantly coming at them every day. Here's my
Yes.
prices, here's my prices, and my prices. So your real estate agent probably off the top of his or her head has 12 companies in her mind of which companies have the best pricing, which companies are known for have the best pricing per product. Like certain companies are really good with super jumbo.
Yes.
Certain companies, like me, I'm really good with FHA, VA
Yes.
type of thing.
Yes.
So they know to start with the shopping. Secondly, they know which companies to stay away from. You have an office of 100 and some real estate agents, and you're hearing about mortgage companies that mess up.
Yes.
You hear about mortgage companies that internally messed up.
Yes.
And they don't settle on time.
Yes.
And you even go to the point you probably bar some of them out of the office. And then you hear about the companies that do a good job. So the real estate agent is going to put you in with somebody not only that has a competitive price, but will get the job done that they trust. Secondly, that loan officer, as I said before, they have an allegiance to that agent. They don't want that agent not to refer them. They don't want that agent to talk badly about them in their office when there's 100 other agents in there.
Right.
So there's going to be a major incentive to provide good service and good rates, because it's not about the one deal. It's about the relationship with the office as well, more importantly, the agent. And with Audrey, I've known you for 30 years, so
Yes.
I haven't messed up that badly, except for that one time you stopped talking to me for 2 years. But we don't get into that.
That's not true. Stop.
Now, as far as a builder goes, a builder will have, most times will have their own mortgage company. And what they're doing is they're pushing that customer to their own mortgage company. So you want to find out, does the builder own their own mortgage company? If they do, you also want to make sure that mortgage company isn't increasing their price to pay for the closing costs the builders are saying they're paying for. So they'll say, if you buy my house and use my mortgage company and use my settlement company, we'll pay $10,000 for your closing costs. Well, that's great unless you're getting paid, unless they charge you more for the interest rate to make up the $10,000.
Right.
Now, many times I have been able to credit the customer the same thing
Yes.
with a lower rate.
Yes.
So you're not getting anything.
I've actually had that happen
So
too.
you suggesting to your agents, or to your customers to check other companies to see what the pricing is a great
Yes.
recommendation for your customers.
Yes.
Because what good is it if I can give you 4.25% and pay $5,000 towards your closing? What's the difference if they give you 4.25% and they pay $5,000 to your closing? They're not giving you anything. The bad thing about using a builder's mortgage company, and I find this to be true often, and you can ask your real estate agent which builders have a bad reputation with their mortgage companies, is that the mortgage company, it's given business. The builder gives them the business, so there's no need to pay for an experienced loan officer. They're more like order takers. They take a loan application,
Right.
and they don't understand how to get loans done when there's a problem.
Right.
They're not going to have the experience of someone like myself. They're going to be young and very inexperienced, and it's going to reflect on the approvals and the non-approvals. The business that I do with builders are basically rejected loans from their mortgage companies. They come to me and get that done. Now, the same thing's going to happen when you go to a bank. There's a difference between a bank that has their own mortgage company,
Right.
and a bank that you go into a retail bank and you're going to talk to someone about getting a mortgage.
Right.
Because those people don't have really any experience in doing mortgages. They do money market, CDs, they do different products as well as a mortgage. And they're not anywhere near as versed as a true professional mortgage banker. And then you get where you hear the reputations about certain banks. And most of the times when I get these rejected loans, it's really because it wasn't put together properly.
So that was another one I was going to say, was that you could go to your bank and probably find a loan officer. But if you go into your regular bank on the corner in your neighborhood, there's not really going to be a mortgage loan
No.
officer in there. They work in a different division, maybe, you think?
They're not
or-
experienced.
Yeah.
A lot of banks have their own mortgage company.
Right.
And those banks that have their own mortgage company have professional loan officers. But
Right.
when you walk into your retail branch and you're going to sit at a desk
Yes.
and talk about a mortgage with
Yes.
someone, you're never going to get the same level of experience.
Okay.
And unless you're perfect and vanilla, the loans blow up at the last second.
Okay, so you want to make sure that you're talking to a mortgage loan officer in the event you go into the bank. You don't want to just go in and sit at someone's desk. Another place you could maybe find a mortgage professional is your financial planner. If you have a financial planner, they might have ways for you to get mortgages. Also, I know that some people may have enough money in their annuities or their stock portfolios, and sometimes they borrow against those things, but I think that has to be done in-house directly with the lender.
Well, this goes to the third part, and this is the
Okay.
same with a real estate agent.
Okay.
You're going to go word of mouth.
Okay.
And if you have a financial advisor that has customers and they are sending you to a professional, it's because that particular professional is good at what they do. They're not going to want you to go to someone that's going to mess up their.
Of course not.
That messes up their clients,
Of
and it
course
messes
not.
right. So they're going to. That's good, and as well as your friends and your
Right.
family that have had good experiences with other lenders. Just like in real estate, you're going to get that word of mouth is the best advertising you can get.
You know, I will tell you one thing. In my experience of being an agent for 30 years, this is not always true, but typically when clients come to me and they say, oh, my best friend's doing my loan or my whatever relative is doing my loan.
That's different.
I let it happen because that's what they want. They have the right to have the mortgage from whoever they want. But I do find that that's the highest interest rate loan sometimes. I really do. I'm always surprised. And I tell them that I can get them a lower rate, but if they have an obligation to that family member, I of course respect that. But always shop around and talk to your agent, because your agent knows who does a good job. They know who will have your best interest at heart, who's going to give you the best rate. I ask Barry, I go, what's the best rate you can give me or give my client, based on their criteria and everything. So do your homework and shop for the best rate. And what about you guys, when you have people come into your, do you have people come directly into
Every
your
now
office
and then
and
they
stuff like
walk
that?
into our office.
Yeah.
Yes.
And I mean, is it like a sidewalk place?
No.
Or no.
No, they'll look us up online and they'll shop and they'll see our address and they'll pop in every now and then. But you got to be careful. You know, if you're a perfect vanilla loan and you're putting a lot of money down,
When
have
you
a high
say
credit-
vanilla, you mean
just
you
like
have
one job, you know,
What?
800 scores. You're not self-employed.
You need to have perfect credit.
Perfect credit, then you can shop. But when you have situations where you got overtime, you have a gap of employment, you're self-employed, things that could go up, experience and knowing how to package those loans.
Yeah.
You know, if you're going to go to the best rate, you're going to wind up in the situation where the best rate means the company is working on lower margins. It means they're not as staffed as properly. They don't have it. You know,
You're not going to close on
your
time.
processors aren't experienced. They're going to go. You know, it all is going to trickle
Your loan
down.
rate's going to expire. All
Yeah,
those things.
if you
so-
have a loan that needs experience, I would recommend that the company you choose is someone that you trust, someone that was referred, and someone that's really close to the best rate, not necessarily the best rate.
And I think that the best relationship really ends up being the one with the realtor and
Yes.
the loan officer, don't you
Absolutely,
think?
100%.
I agree. I think that's the one. Well, thank you for joining us again today, and happy 4th of July to all of you. We'll see you again.